Good morning, everyone, and welcome to the WebiPanel on the reimagining the garden route and looking at finance for impact. As we have indicated in our previous WebiPanel and Webi shops that we have had so far, that we wanted to follow up with specific interventions such as the finance one. Later on, we'll probably do some marketing and very sector-specific workshops, but definitely looking forward to this one today, as it is very specifically aimed at businesses that perhaps must try not to be too reliant on government funding and also not sitting back and waiting for things to happen. So the idea today is to actually give you a couple of pointers and one or two other solutions that you may or may not have thought about. But we believe that the panelists will be able to give some insights into some new processes and new models, perhaps, that you can implement as a business. As we are sitting here, we can see that the people are joining us, but yeah, we will start now and allow whoever wants to join. Over to the house rules. Please also make sure that any comments and so forth can perhaps go into the chat room, introduce yourselves there, making sure that you put your name and perhaps email address down. And then any questions you may have for the panelists, please put that down in the Q&A section per se. So we will then also refer to that and ask the questions on your behalf, or maybe the panelists will be able to answer it from where they are sitting. If it's something they can field offline or then with you specifically, that will be done accordingly. If we still believe that the question is relevant to other people, we will definitely ask it live to the panelists, and then they can answer it back to all of you as we sit here. So yeah, without any further ado, let's go and let's work this WebiPanel.
So Andrea, you're the first up. So if you just very briefly, 1 minute, who you are, who you represent, and what you do, and then obviously we'll go for the. So over to you, Andrea.
Thank you, Paul. So good morning, everyone. Lovely to be here. As Paul mentioned, I'm Andrea Morgan, and I was, and still is, a crowdfunding catalyst. I was part of the team that launched Thunder Fund in 2013, which is technically South Africa's leading crowdfunding platform, which then also grew into an umbrella that included donation and equity-based funding. And since then, I've just had an absolute passion for businesses going from best to better and focusing on marketing and creative aspects and everything that has to do with doing great communication to your clientele. So thank you.
Thank you, Andrea. Then Anton is standing in for Tawfiq, who was on the original invitation list, but we're very glad that he's obviously as knowledgeable, and I really like his background, and that takes us back a long way. So Anton, over to you for the introduction. Thanks.
Thanks, Paul. Good morning, everyone. As Paul mentioned, my name is Anton van Tellingen. I work for Wesgro. I'm a district portfolio manager at Wesgro. For those of you who don't know, Wesgro is the official investment, export, tourism and film promotion agency for Cape Town and the Western Cape. We are funded by the Western Cape Department of Economic Development in the city of Cape Town. And my focus is to support businesses based outside of the city of Cape Town, specifically in the garden route, the various districts of the Western Cape, but the agency as a whole is mandated to support businesses and help them explore their export interests. If they're looking to raise funding, we do that via investment promotion, and there's obviously a film and tourism aspect to what we do too. So I look forward to sharing with you today. Thank you.
Thank you, Anton. Looking forward to also hearing from more from your side. Next panelist is Sonja Clarke. So Sonja, if you can quickly do your introduction, please. Thank you.
Yes, morning, Paul, and thank you very much for inviting me onto the panel today. A brief introduction of myself. I have 2 decades worth of experience with chambers of commerce, bilateral trade, having the opportunity to work with some international or multinationals, creating trade between South Africa, the UK, trade between the US and South Africa, And the purpose of today's panel from my side is how to diversify your investment portfolio, how to create global mobility, and also secure your RAND or your funds in terms of real estate investment. Thank you.
Thank you, Sonja. Yeah, so that's for the, obviously for the guys that's got that funding, but it's a good idea to actually look at different options and different approaches going forward. So looking forward to a little bit later on to hear more from you as well. Last but not the least, there's a combination there. At the moment on the screen, it says Jan Brits, but it's Tommy Berger and Jan Brits from FNB. So I think Tommy will do the introductions for us. Thank you, Tommy.
Yeah, morning, Paul. Thank you, everybody. Thanks for your time and attending. My name is Tommy Berger. I'm the area sales manager for FNB business in the Garden Route in Karoo. I'm currently based in George and employed by FNB for the last 23 years. I have a team of relationship managers reporting to me. They are each responsible for a portfolio of customers. Our customer base includes businesses in all types of industries, including agriculture, franchising, tourism, and various service industries. I will cover two topics today. First one, what factors are considered when assessing a credit application. And then I will briefly touch on two alternative products I feel that's not commonly known in the market. And I'm assisted by my colleague Jan Brits, from also a business manager in the Garden Route.
Thank you, Tommy and Jan. So also looking forward to that, because I think sometimes we do forget that there's obviously new models and new products and new processes coming out from existing providers as well. Yeah, so I think, and I see the guys are still joining as we speak, so I'm very happy for that. So again, for those new ones, welcome. And I think, again, as I said earlier, please yeah, just introduce yourself on the chat side, but Q&As, please, on the other side. I'm sure you've got some questions that you would like to raise. In terms of perhaps a generic question, or maybe sometimes directly at yourself, but I think there probably will be more questions as we go through the panel and through the initial discussions that we're going to follow. So yeah, first of all, I think Anton, if you can get there. So I think we're going to kick off. On your side, you know, when you introduced yourself, you did mention that you're looking at a variety of potential funding that may be out there, and that you're sort of investigating and checking and looking for fit and good, you know, good processes, and helping obviously the clients out there to get to the right funding model. But in your mind, I mean, what is the fund? Let's call it the fundraising or the funding or the financing areas and the ecosystem actually look like? So in other words, I mean, what are the typical players there? And I know there's a variety of things, and we'll have one or two of them later on talking, but maybe just a sort of a brief overview on your view, what's out there, what does that system look like, that ecosystem?
Thanks, Paul. Sure, happy to give my input. So when we meet with clients, generally the first bit we try to figure out is what's the most appropriate funding in terms of the business, and what sort of funding would match their needs the most. But I think if you're a business, and I understand we're speaking to quite a large array of businesses on this webinar that may be looking. So I thought it would be good just to give you an overview of, as you mentioned, the ecosystem, and sort of take you through the various role players that you could consider if you're an SME, if you're a medium or a startup business. So we'll start first and foremost, and then you can almost imagine it as a solar system of planets, and the closest to you are going to be friends, families, and fools, or ex-colleagues. Also, and I use that term as in those are the first people you would approach if you're starting a business, if your business is coming under pressure. Largely because the conversations are easy to have, they understand you personally, they're able to take a bit more of a risk on you, and generally those are the people that would back you most, first and foremost. So that's kind of the very the closest form of financing, and generally the easiest, that I suppose would also require the least amount of administration and documentation in order to do it. Then moving slightly further out, you would get business incubators and startup competitions. Basically, the competitions may be around a specific industry, and this will give your business, specifically if you're a startup, an opportunity to showcase what product or service that you may have, and startup competitions similarly, that if you really believe that you've got something that differentiates from the rest of the market, an opportunity like a startup competition will give you the opportunity to showcase that. Thereafter, and we'll be hearing a little bit later about it, are the crowdfunding platforms, of which Thunderfund is definitely the most widespread one in South Africa. Andrea will probably give a bit more information in terms of that. But the concept of crowdfunding is relatively new, I suppose, in the history of traditional fundraising. And going forward, I definitely think it will play a much larger role in terms of fundraising that the traditional sources of funding aren't able to fund due to their mandates, or aren't interested because they don't see necessarily the value. And being able to fundraise a project by bringing in hundreds, if possibly thousands of people who buy into your vision is quite an exciting prospect. And I do think that it has room to grow. In terms of the legislation in South Africa, we were still sort of in the early days of equity crowdfunding compared to the likes of the USA and the United Kingdom, but I definitely think we're moving in the right direction and that it's going to play quite a big part going forward. Thereafter, we'll probably look at your local banks, and I think, and we'll be hearing from FNB later today, but a local bank is quite an unexplored partner, but also a partner that makes a lot of sense. You've got a credible history with them. If you're an existing business, the documentation is largely out of the way. You may need to just make a case a bit more in terms of the debt that you may be requiring from the bank, but there's also a host of local banks that you are able to consider. Thereafter, you could look at either local, provincial, or national funding programs, and this is through many of the government's arms. The downside to that is, on the moment, we were very much aware that the pandemic has put huge pressure on the fiscus and on funding opportunities, but opportunities still do exist. The DTI has a number of programs. SARS also has a number of programs for businesses willing to take. And then the Western Cape government itself currently has a work and skills program. They had a tourism relief funding program early this year. So I urge businesses within the relevant sectors that are able to explore those funding opportunities do so. And then there's also the Department of Small Business Development with CEDA and CIFA who offer funding opportunities in the form of debt financing. Then moving slightly further out, you get what's referred to as developmental finance institutions, DFIs for short. In South Africa, an example of the DFI is the Industrial Development Corporation, and their role is similar to that of a bank, except I'd imagine that they would take on a lot larger projects. So we're talking, let's say, in the region of 50 million Rand plus in terms of the numbers that they're looking at. And the type of financing could also be a blend of both debt and equity. Internationally, there are international development finance institutions that focus on Africa. For example, there's the institution called FMO, which is based in the Netherlands, which invests extensively in Southern Africa, and their focus is specifically on agricultural projects, energy projects, and impact investing. And then in France, there's another DFI by the name of Proparca, which also invests in Southern Africa, and their focus is more on renewable products, microfinancing, areas where they feel the impact can be quite large. And just a note in terms of DFIs, they generally prefer, if you are going to approach them for fundraising, that there is a local partner involved, be it a local banking partner like FNB, or be it a local large shareholder who has a stake in the business, because they don't generally like to take on big projects unless there's a local stakeholder who's also willing to put some skin in the game. And then after DFIs, the other sort of area that you could consider, which would require a lot more equity, would be venture capital. Venture capital is very popular for startups, businesses that are on a high growth trajectory and are looking to raise financing so that they can increase their scalability. And then thereafter, slightly more mature but still high growth businesses would lead you to private equity, which is where businesses are looking for a strategic entry point. They're looking to be able to gain perhaps an equity or a debt share that would allow them to exit in a relatively short period of time, talking 3 to 5 years, possibly up to 10, in terms of achieving quite an impressive return on their investment. So that's basically the ecosystem that we look at when discussing a client's fundraising needs. And then there's also additional platforms that cut across all of those. And I think it's the conversation today is sort of the next funding model. And you get platforms that we've started to use and that we've referred some of our clients to, like FinFind. I'm not too sure if some of you have come across that, but FinFind, what they look to do is onboard over, I believe they now have over 600 funding institutions, and similarly run you through a short application process where you answer a few questions around your business, what stage your business is in, whether it's pre-revenue or post-revenue, medium or large. And then the outcome of that will, after completing a short survey, will output a few options that are best suited to your business funding needs. And the idea is that the platform would serve as a matchmaking. So I truly believe that embracing technology and using technology to seek funding for your business is definitely something that you should consider. And I'm looking forward to the prospect of more opportunities becoming available to SMEs, specifically in South Africa. Thanks, Paul.
Thank you, Anton. If you don't mind, just posting maybe that link, so that when the guys on the call wants to perhaps access that they can do so. And I'll come back to you a little bit later on that. So maybe if we come back to another question and you want to just quickly show that website or that link, it'll also be great. So if it's possible to do so. And thanks, yeah. I think
sure.
The one scary part that you mentioned is that there is such a wide variety of options available out there, and sometimes which is the best one. And we're very grateful that between yourselves and the Western Cape government and other institutions that we are looking at, minimizing that options based on your specific profile, because I think that's very critical. That sometimes you believe and yeah, I think everybody sitting around here that's been asking for funding and finance always obviously believe your case is sound, but sometimes purely based on your profile and purely based on your the way that you address it and pitch it, I think is very critical. So Anton, maybe and I'm asking it, at some point we might want to link another session, perhaps at some point. I'm just thinking while you were talking about the pitch deck, that maybe we should have another session on a very good pitch deck. What does a good pitch deck look like? I think when funders actually receive information, they're sitting there with 200, 300, 500 applications at one given time, and yours need to stand out. And sometimes they don't want to read through a 60-page business plan. They want to see a 12-slide pitch deck, perhaps, or a 2-page business case. So maybe we can pick that up on another session again and see how we can just maybe give guys practical experience on that. But thank you so much for that. I think Tommy, we did have an indication there that obviously with the current financial institutions, I'm sure we're inundated at this point in time with potential support, especially where grant funding and state funding is running out. But obviously, as we were just saying, so each person or each business's profile differs, and sometimes where people believe they should have qualified, they don't. But maybe just give us a quick indicator on the factors that normally gets taken into account when you actually do assess a credit application, that we can just give the attendees a bit of a feel for, when is it the right time to come and how do you need to approach and what do you have to have ready. Otherwise, it's a no, and some people don't understand it, but if you know it upfront, at least you can work on it. So maybe just give us a couple of indications, Tommy.
Thanks, Paul. So first of all, I'm not going to go through the information that's required. I'm more going to focus on how the bank look at an application following the information that we receive. I think it's important for us to differentiate between the categories within FNB. First of all, we've got private clients, private wealth. The focus here is on the consumer or the business owner himself in his personal capacity. The salary that the individual earns is taken into account to determine the affordability and levels of debt that the customer can apply for. Normally, a customer will apply for a bond to acquire a primary residence via this channel. Then we've got a public sector, and the segment assesses municipalities and the majority of schools in terms of debt levels and funding requirements. And then we look at on the business side, and this is my area of responsibility. All businesses with turnovers from zero up to listed companies fall in this space. Where companies are listed, the mandate falls within RMB. Important to remember that credit and the assessment of credit is differentiated between judgmental and non-judgmental credit. For the purpose of this discussion, I will focus on the judgmental side of the credit assessment. Very important, and you actually touched on it just now. From a customer perspective, is that each credit assessment is assessed on own merit. Customers might have the same type or the same level of funding requirement, but each business situation differs and is unique. When we receive a credit application, there's basically 5 criteria that's used to assess the request. The first one is, who is the customer? Here we look at questions and answers to, is the customer a bank or a non-bank customer? For an existing customer, how is the account conducted? We use our internal systems to verify that. Where the customer is not an FNB customer, we may ask for bank statements to verify how the customer conducts his account at a previous bank or a current bank. Where a customer trades as a sole proprietor or a trust with 2 or less trustees, the credit assessment falls within the National Credit Act, and some additional requirements, criteria and requirements might be applicable. The bank might also ask for an organogram to have a full illustration of the customer's group structure. Very important is the wording structure. I refer here specifically to the type of legal entity that the application will be made in. It might be more beneficial to finance to a company versus a sole proprietor, purely from a succession planning perspective. The bank is also happy to have these discussions with the customer and his legal tax representatives to ensure that the correct decisions are made at inception. We often see that a business starts very small.
It only mirrors as Tommy frozen.
To acquire a property or to fund the purchase of a vehicle.
Okay, you're back. Okay.
The bank must understand how the funding level is determined. For a property transaction, there will be a purchase agreement, but how is the level of funding for an overdraft determined, for example? Very, very important is that the customer make any own contribution, or is the bank taking all the risk from a funding perspective? This is also normally where the swear word cash flow forecast is mentioned for the first time. Customers must remember that the bank borrows money from the Reserve Bank. This funds is reserved, the capital is reserved at a cost to the bank, irrespective of whether the customer is using the funds or not. So for both parties, it's very important that the correct funding level is determined. From a funding perspective, the bank must also understand what the customer's medium to longer term finance requirements are. It's very important, as the bank doesn't wish to grant a request now, only to decline a request if the funding requirement is aggressive or outside criteria at a later stage. Then we look at the financial position, the third thing. Are the financial statements current? As a norm, financials should be completed within 6 months of the financial year of that company. If the financials is outdated, it impacts on the pricing of the facility. Then we look at, does the financial position of the applicant reflect a solvent position? If insolvent, the bank's not allowed to advance any credit. Is the applicant profitable? Very important, as profits repay debt and not turnover. We need to know what the dividend policy of the company states. This is important, as a company cannot declare dividends and then the bank debt has not been repaid yet. And then also important is, are there any intercompany loans and what is the repayment terms on these? The fourth thing, and most probably the most important thing, is the affordability. So can the business service the debt applied for? And what is the customer's debt capacity? The bank, very important, the bank must be able to establish what is the sustainable cash flow of the business. Questions that might come up here is, what is the CapEx requirement or capital expenditure requirement going forward? What debt does the customer currently have outside the bank, and is this debt paid up to date? What is the repayment terms on this debt? When is funds expected from debtors and how quickly must creditors be paid often influences the cash flow. What will happen if the interest rate increase? Currently, the interest rate is affected by COVID and low rates is not sustainable. With the junk status that was declared recently, the cost of credit is supposed to be much higher. First Rand predicts that the interest rate will remain at the current levels for the next 18 months. But what will happen if the interest rate increase then with 2 to 3%? Can the debt still be serviced? What happens if there's a delay in imports of a product and manufacturing cannot continue? Very important, FNB is a responsible financier, and if a debt applied for is not affordable, or if affordability cannot be proven, the bank will rather decline the request than to take a view only on security. Lastly, and I mentioned this last, as many people think this is all the bank look at, is what is the collateral. Here it's important to know how liquid is the collateral offered. In other words, how easy is it to realize the collateral. An example is it's easier to realize a debtor book versus selling a property. How easily can the collateral be valued? A listed company must publish their financial results. So having this company as a debtor is easier to determine the value of that debtor versus having to validate the financial position of an individual. Then what is the possibility that the value might change? Is the collateral item on offer dependent on the success of the business? We've got different forms of collateral. To mention a few, we've got stock, we've got debtors, property, cession of deposits, or listed shares, just to mention a few. Then one of the most important ticks in the bank side is what is there surety? Is there a shareholder or director that's also taking risk in the lending? We normally ask for a limited suretyship, limited meaning limited to the amount of the funding that's granted. A surety from a director or a shareholder also illustrates commitment from the jockey side to make the transaction work. What I just mentioned is my points that's used in a credit assessment. Again, I want to emphasize that each application is looked at in isolation. And due to this, other concerns and questions might come up during an assessment. Just linking it back to today's topic, in South Africa, SMEs are important drivers of the economy. We often refer to this as the backbone of the South African economy. And in closing, it was announced this week that FNB was awarded the Global SME Finance Award for the best SME bank in 2020. I think we're in a year that's one of the most difficult in history and most unique years in history. And this is really an accolade we are truly proud of. And this is also, I want to use the opportunity to thank you, our loyal customers, as we would not have accomplished this without your loyal support. Thanks, Paul.
Thank you, Tommy. Yeah, it's always a maze of things to work through, but it's critical. And I think we'll get back to a question that Clyde asked earlier, Anton. You just ready yourself for that. When we look at a funding readiness, what does it look like? But we'll get back to that question. So maybe just for you to prepare a little bit. And then Clyde also asked if you can send in the link and the info on agricultural funding, international funding opportunities, perhaps, if there is such a thing. Great. Thanks, Tommy. I think it's critical to understand that process. I think a lot of us sometimes hear about it and sometimes do it and has experienced it, but it's good to get that full feedback again. I appreciate that. I think I want to go over to Andrea quickly, because again, Anton mentioned crowdfunding very briefly. And I think it's a concept that I think we sort of getting used to, but not necessarily understand fully. I think this crowdfunding thing sounds like nice and sexy, but how does it really work? What is the basis on that? How does it work? Is it equity based, or is it based on a system of rewards, or do you just hope people put money in and don't want anything back, or how does it work? Sometimes it'll be nice. I mean, if you can get crowdfunded and nothing is expected back, it would probably be cool. But does it really work like that? So maybe just give us some insights.
Perfect. Thanks, Paul. So yeah, as much as crowdfunding sounds sexy, it is a very, very, very time-consuming campaign that you can do for your business. So as Anton briefly touched on, it's funding from crowds for your project or business rather than two major investors. South Africa currently has three major types of crowdfunding that we work with. So it's donation-based, rewards-based, and equity-based. And this choosing which one depends on your business and where you are financially in the market. So if you take the aspects of what Anton and Tommy have already spoken about, to run a successful crowdfunding campaign, you need to capture the attention of a large number of backers and convince them that your project is worthy of their investment. So this is the money coming in, and that forms that crowd that's already your target market that is keen on your idea. And that's why we refer to it almost as a risk-free model of funding, because it allows you as a project creator to raise awareness within your market or your audience by pre-selling the product or service before engaging in significant resources. Currently, how most of the campaigns work is that if you do not reach your target goal, the money goes back to the backers, and then you haven't invested anything apart from time and maybe marketing. So to quickly touch on the difference between rewards and equity, as those form the two main distinctions for businesses, donation falls more with individuals who are just looking to raise funds. So rewards-based crowdfunding is when donors receive something in return for their contribution. So this depends on the size of the donation, and that it often falls into the business. So to give example, if you are a chocolate cafe, you can offer people chocolates to full-on chocolate making workshops with you. And if you are equity-based, this allows smaller business and startups to give away a portion of their business in exchange for funding. So completely different model, and that forms more into when you are set up as a business. So in equity, the donations are a type of investment where participants receive shares in the business based on how much money they contribute. So two very, very different ways of raising funding for your business. And you may fit into the middle. So you may need to prove concept in order for the bank to give you funding, which is where you may want to do rewards-based funding first and then move over to the bank and actually say, I have 1,000 odd backers. They've all purchased my business or into my business. I have a crowd already. I have the money. People want to buy into this concept. So that's exactly where crowdfunding kind of fits in between to, as they once said, to democratize finance for people. So there's a quick little summary for you, Paul.
Thank you for that. I mean, I think there should probably be some questions around that, because I know I had one or two for you when we started talking about issues, so so there is a potential of donations, but that's probably more for your NGOs and those kind of places than your typical business. I mean, a lot of people won't necessarily just donate unless they really, really like your product.
Yes, everyone wants something back in the end.
Yeah, nothing is for free, is it? So, but the rewards one, in a certain sense, that will probably work a little bit where you have, as you say, I mean, where there's a membership potential, for instance, to say, listen, help us to put this up, and you can get a year or 6 months or a month's free membership for your contribution, kind of thing. So so that you already cover some of the expenses by doing what you're doing in that regard. So, and then typical equity is like equity. I mean, you have to then start making some money to pay the guys back, and that can probably take. How long does it take? Just quickly as a follow-up question. I mean, if it's equity based, what's sort of the expectancy from?
Oh, so it's kind of, I guess the question is,
money back next year, next week, from now. What's sort of the criteria?
So yeah, as I was about to say, it's sort of a question, how long is a piece of string? But people generally, as soon as they've backed you, they want in on your company. They want constant communication. What's going on? Where are you? Where are you going? So it's from day one. Typically, people are really, as soon as they put their money into your hands, if you will, they want that communication, they want that to go. And typically from a rewards-based side, you have between 30 to 90 days to raise your campaign. For rewards-based, you definitely want to operate in a shorter amount of days, so to take a month, whereas equity funding, obviously there's a lot more that goes into it, so you'd run a longer campaign for that. And as I said, people want what they want immediately. So you'd have to start delivering as soon as the money's come in. So that's why I say it seems sexy, but it's a lot of work. There's a lot of communication involved and keeping people happy.
There's friends with benefits. So what's that?
Yeah. So
kind of
it's the same kind of approach that you wouldn't just approach someone in a bar and go up to them. You kind of have to build a relationship and start chatting, and the same sort of applies to funding in a way.
Okay, so it's probably then a little bit more for a startup to do that rather than perhaps somebody who wants to expand. I mean, that sounds like it's easier to do it when there's an expansion rather than a pure startup. But I mean, obviously it can be done for startups as well, but there's a different risk for those guys that crowdfund. But thanks, yeah, thanks, Andrea. I think that's food for thought. So we'll get back to you a little bit later on about when how suitable your business might be or not be. You know that it's suitable. So I think if you just can think about that a little bit, so we'll come back to you. Thank you. Sonja, when we're talking about potentials within the current systems, and then this interesting thing called crowdfunding, and then some other opportunities that may or may not be out there. Your view on diversification of your portfolio. I mean, is it wise to keep everything, for instance, here, or can you look at some other alternatives, perhaps? Elsewhere in the world, and how to, can you leverage that as well back into your business in South Africa, for instance, or is that also a potential for you to do some overseas linkages and things like that? So maybe just give us a thought on that, perhaps from your perspective.
Sure, thanks, Paul. So I currently represent a company called First Pathway Partners in the United States. They are typically an immigration company, but why I'm on this panel today is I also have opportunities for South Africans to enter the United States as a non-immigrant. And it's I need to stress the fact that your E2 visa is a non-immigrant visa, and it does give you opportunities to invest in a business in the United States, which we've taken care of already. That business is set up, it's ready to run. It's in the top 5,000 growing businesses in the United States. The stats that came through last night, in terms of the decline, economic GDP decline, the United States still fared the lowest. It's sitting at 3.6% decline, and jobs have already been created. Yes, we're sitting in COVID, and we're all concerned. Carte Blanche had a whole series last year about how many people are immigrating, and obviously the skills drain and all of those things. Where I come in and just re-look at the situation, it's reimagining everything. And as a South African, I love my country. It's just, at the end of the day, families and business people out there are looking for alternatives to possibly put their money in a safe economy. And we're able to do that. Having a 100% success rate in more than a decade, that is possible. Over $1 billion US worth of investment has been created. So in terms of South Africa, I think, having looked at some of the economists, the question is it too late to immigrate? But looking at it from a South African view, a lot of us will be leaving loved ones behind, and we don't typically want to do that. We would rather look at diversifying, have a look to see which is the best option for one. I don't come as a financial services expert, but in terms of a track record in investing in real estate, it's a more refreshing look, because a lot of South Africans, yes, because of COVID, in the first 2 months lost about 30% of their net wealth. While there were other people that were looking at alternatives already, investing their funds, we offer programs, that will qualify you for the E2 investor visa. And that investor visa will give you returns at the end of the day. So it's a really stringent process, and USCIS, which is US Customs and Immigration Services, will have a look at your application, and they need to be satisfied that you have no intention of living in the United States, and that you still have a current successful business in your home country. And I think that is the key. I've addressed many issues at the start of COVID. I mean, we had no idea where the globe was going. I addressed, the taking stock of the rand. That was one. Partnered with Sable International, just to give us a broader aspect as we were slowly moving into this unknown territory. I also had CGF, which is Corporate Governance Framework. We had Terry Boyson on. And he explained the importance of corporate governance. And I think in terms of looking at South Africa, we need to maybe re-look at our models and actually implement the corporate governance structures that we have here. We're all here and we want to see our country thrive and be prosperous. And I believe that all of us collectively can contribute towards that. I've touched on topics like education. I had an expert, a professor from the United States on that I interviewed, and she had only good things to say about South Africa and our education system, which is actually refreshing. You know, that is a topic we need to address, and also skills transfer. I did a webinar with Dr. Gavin Zip, you know, on the state of of our medical system in South Africa. I mean, how has it affected us? I mean, also the corporate governance around prevention, you know, of risk, and especially around the medical sector. We do not want to see our doctors leaving. Then I also had ex-ambassador or former ambassador Malcolm Ferguson on board, and that was also very educational in terms of our agriculture sector. Malcolm Ferguson and a couple of high-profile people in South Africa have actually generated billions of rands for agriculture, and mainly focusing on food supply. It is a challenge, and it is a big, important step in terms of saving our country. It is a massive step for food security. And I think at the end of the day, we should look at our mindset. Where are we as South Africans? Are we loyal to our country? Do we want to immigrate because of financial reasons? Do we want to stay? Are we looking for global mobility? Are we looking for a mechanism to be able to travel visa-free to over 140 countries? And I'm talking to the people that, the business people that would require visas to the Schengen states, the United Kingdom, Russia, China, India, South America, Africa, and all those places. We all know, and as we know, the visa process has basically come through, it's halted because of COVID. And a lot of, you know, the immigration services have also halted. So I think the mind shift that we need to have is, let's think of alternative ways. I mean, funding for impact is actually key to the success of South Africa, especially having had the experience and looking at how it impacts the United States, exactly their economy and how they're going to rebuild it. And that is something we can go into at another stage. But I think in terms of our banks, that is very, very important that we go speak to our bankers. FNB, you know, we know has got a very good track record as well. So if you're looking at doing funding models outside of South Africa, you would have to have a good foreign exchange partner. You would have to have your taxes in place in South Africa, and you would need Reserve Bank clearance. And that's where the banks come in, especially for the business people that need to go into the international community to be able to grow their local business. I've actually had a lot of success stories of people that were looking to immigrate 5 years ago, 2 years ago, still haven't done it. And there are people that have actually outperformed through this COVID period, just by taking different strategies and different outlooks on how they're going to move forward, you know, with their businesses. I mean, I've got a very close colleague. His business is in excess of 20 million that they've, you know, on their books, and it's not even the end of the year quite. So yes, we come with a different approach. The projects we've got for non-immigration will give you returns between 2 and 5% on, you know, on either an investment into real estate or into an E2 project, which is totally outperformed pre-COVID. So thank you very much for having me on the panel, and I'll be happy to answer any questions if anybody's got questions for me.
Thank you, Sonja. Yeah, so that's interesting to hear, because I think it's also good to understand where we are at with, you know, some alternatives, staying in South Africa, but maybe yeah, just looking at ways of improving your funding opportunities. Anton, I want to get back to you. You know, when we spoke about the funding readiness, I think that question came up a little bit earlier. What does it actually look like? How do you prepare your business? I mean, we spoke a little bit about potential future, you know, workshops on that. So maybe just give me a quick feel for that. What does it typically look like? You can expand a little bit on that, because I think it's also important that people understand when they do ask for funding, how, you know, how to approach it and what typically people want to see. I mean, as I said earlier, there's literally hundreds of applications on anybody's desk at any given time. So how does yours stand out? So maybe if you can help us with that, thanks.
Sure, thanks, Paul. Yeah, in terms of just before I even begin the funding readiness process, I think it's important to note, I was reading in a statistic last week that over 90% of the UIF applications that were submitted during COVID lockdown, which is, I think, something almost every business in South Africa would have had to deal with, were incorrectly submitted, as in they were omitted documents, there was errors in the application form. And I think funding readiness speaks to exactly that. It's what are you submitting the most comprehensive application that you can as a business, and are you applying for funding that suits the mandates of the funding institution? So we were lucky enough to listen earlier to Tommy about from FNB regarding FNB's mandates and what they look for. And I think it's important that the first step of your funding preparation is to understand who you're going to be submitting the application towards, and whether or not that funder's mandates aligns with the business case that you're putting forward. So for example, if you were an agribusiness, you wouldn't go seek funding from a funder that necessarily funds manufacturing, for example. So I think it's very, very important to, before actually deciding what you think may be the most correct documentation, go and take a look at the funder's website or the application form, and take a full look at the extensive checklist that is going to be required in order for you to submit that application. So once you've done that, I suppose, and you're considering that there are a few options to think about, the ways of funding your business, and a lot of them we know. I mean, one is debt or taking a loan. That's we're going to require you to make a repayment at some point in the future based on an agreed interest rate. Equity is where you actually give up a part of your business to a partner, to a shareholder or shareholders that are able to, if they have a significant enough interest, make decisions on the business, and that's generally a long-term partnership. Mezzanine financing is a blend of, I'd say, debt and equity, whereby you may have an option of converting either your debt into equity at a later stage. And then you also get cash flow financing, which is just to manage your month-to-month cash flow in terms of if your business holds stock, if you are behind on your receivables. And then lastly, which is, I think, the most spoken about, but unfortunately the most oversubscribed, is grant funding, which is can be done by the national government. So grant funding generally will be in areas of focus that at this point in time can help with the recovery of the economy, and I imagine, but also may have an element of debt attached to it as well. So once you know what the mandate is and the type of funding you're seeking, you can then go ahead and start preparing your application. And I will be sharing a SME fund readiness guide with Paul so that he can distribute to all the participants of this webinar afterwards, which goes into a lot further detail than I'll be covering now. First and foremost, you need to begin with a business plan and your forecasts. You heard Tommy refer to as the dreaded word cash flow forecasts, but it's incredibly important to understand what the future cash flow of your business, cash at the end of the day is money moving in and out of your business, and it really is a signal of the health of your business. Get the application checklist and make sure that you understand all the nitty-gritties. That may include CVs from directors for their previous experiences, business licensing that you may require, permits to operate, shareholder meeting notes. It really can be as extensive as that. And I think the idea is you want to put forward the most comprehensive application that you can. Financial metrics, and this refers to understanding that if you're going to go into quite a serious conversation, perhaps with a venture capital company or a private equity company, you need to understand terms like internal rate of return and cash growth forecasting, because they're expecting you as an entrepreneur, as a financial manager, as the owner of the entity, to be the person who has the most knowledge about the financial status of the business. Then I'm going to speak about offtake agreements and MOUs. This is something we also urge a lot of businesses to engage with to try and produce. And if, for example, you're a pre-revenue startup, you're a business that's still trying to prove its worth, but you are looking at fundraising, an MOU, which is a memorandum of understanding, could be signed up between two companies as an informal agreement in terms of there's no legal obligation. However, an agreement whereby, let's say you were selling a product, I'll use Andrea's example of chocolates, you could sign an agreement with a local store that you'll be able to provide them X amount of chocolates for at X price at some date in the future, and the company could agree that they'd be willing to purchase at that price. And that just formalizes a document and shows that there is a little bit of faith in your business idea. And I mean, further to that, if you can actually start producing the materials, offtake agreements. So these are companies who are willing to purchase the offtake that the service or the product that your business provides. Then I want to just speak lastly about bootstrapping. Bootstrapping is a term that's thrown around a lot, I think, in the startup space. And the idea is that it's waiting as late as you can as possible in your fundraising journey before exploring external funding mechanisms. So before taking on debts when you're not able to service it, before giving away too much equity, build your business out as strong as you can on your own legs, and hence the term bootstrapping, by pulling yourself up by the bootstraps. It's incredibly important that both from your fundraising partner's point of view, that they can see you've been committed to this, you've put in your own capital, you've driven it as far as you can, and that it's ultimately able to now introduce its first partner, whether that be a debt partner, whether that be an equity partner, and you've waited to the latest possible moment. And I think the benefit is that you're able to generate the maximum amount of value that you can on your own for that business, and you're now at a stage where you can start welcoming other participants. And then lastly, I mean, I think something we've learned over COVID is to have an online presence. Even if your business is a simple laundromat that's operating to a very small local community, I think it's important that you take advantage of social media, you get yourself a website, and have a digital presence in this day and age. It definitely goes a long way to sort of increasing your brand awareness. But as we see now, businesses that weren't able to adapt quickly to digital mindset suffered the most over this pandemic. So that's just a very basic overview. But as I said, I will be sharing a document around funding readiness that goes into far more detail in terms of SWOT analysis, problem statements. Are you addressing a need in the market? And yeah, I think the last thing I'll just end off is focusing also on exports, in terms of, and exports can be included if you have a physical product or if you have a service that can be exported internationally. It's a great way of bringing foreign currency into your area, into South Africa and into your community, but also to create jobs. If you have a product that is demanded by either on the African continent or internationally, increase order sales, especially the purchasing power that the rest of the world has, can see your business increase exponentially in a short time. So if exporting is something that you are considering, please also don't hesitate to reach out to me. And at Wishcro, we can see what we can do for you to assist. Thank you very much.
Thank you, Anton. Yes, we sometimes joke and say we're actually exporting from the Ghana route into the rest of South Africa as well. So, sometimes we also look at that perspective, because I think we don't necessarily understand the markets out there. So I think market access is actually quite critical, apart from the funding part of it. Typically and maybe between you and Tommy, just before you switch off there, when one looks at a pitch deck, and I mean, it's, and obviously we'll get to that process a little bit later, but typically it will have a couple of key notes on a pitch deck, if you want to put it that way. So typically you'll have, obviously, who are the jockeys, who are the people running this. I mean, sometimes from what I'm understanding and the way that I used to work when I was a business advisor, is that sometimes makes the biggest difference. Is who's that person behind that business, and irrespective of all the other stuff, can this person do the job? Can they actually run this business? The rest can almost be, and I think a lot of equity partners and those kind of guys are actually looking more at that than perhaps the financial so much. But obviously from other perspectives, Tommy and the IDCs and the business partners also want to at least see the financials. It's important. But I mean, if the guy can run the business well, it already makes a big difference. And I think sometimes that's a big issue. And then what's the problem that you want to solve? I mean, you know, we have a lot of people with very similar businesses in the same area. And sometimes it's good to have competition, no problem. But, you know, sometimes it's overexposed and totally over too many people in that same kind of environment, and that also makes it difficult. So you need to be different. And how are you different from other people, and how do you show that? And I think obviously the repayment of things are important. You know, what I used to tell my clients when I was still consulting is that even if you get grant funding, can your business survive as if it's repaying a loan rather than just purely rely on the grant funding? Otherwise, you are grant fund reliant. And the minute the grant funds run out, your business stops. You know, so sometimes it's also very important to look at that process and say, listen, grant funding is a bonus. It shouldn't be the saving grace. I mean, how do you feel both of that? Anton, maybe quickly you, and then Tommy, you can then respond, and then maybe also give us an idea of some of the products that's available out there to cover what we've been talking about.
Yeah, so I mean, yeah, to speak to your first point on backing the jockey, I think that's definitely the case in sort of a startup business, especially if someone who has history in a specific field or sector and has a key understanding in that market. But I think when it comes to any formal institution, any formal funding institution, the documentation is as important. I think at the end of the day, if that jockey gets hit by a bus, you know, the business case still needs to make sense, and it still needs to be a going concern going forward. In terms of grant funding, yes, I agree. I think the element of grant funding also focuses on the fact that you need to, it's not going to cover all the expenses, it's just going to cover an element, especially if you're receiving grant funding from the national government, and you need to be able to show that the rest of the operational costs of the business are covered. And I agree with you, Paul, it shouldn't be seen as something that will be there forever in perpetuity. Once that funding drives up, you're going to have to sustain the business based on your own revenues. And yeah, if that's not possible, then you're just delaying the inevitable. So yeah, that's just 2 cents from my side.
Thanks, Anton. Tommy, just quickly before you answer, Tommy, Suko, if you have questions, just please post it in the Q&A section. I see there's a couple of hands coming up on the attendee side. Unfortunately, we can't unmute you there, but I think if you just don't mind putting some questions in the Q&A, and we can try and manage it from there. Tommy, yeah, I think, you know, from the interesting chat that, you know, in terms of that whole process that Anton described now, you know, obviously there's a host of products available also out there, which we're not going to go into too much detail, but I think it's important to understand what typically products and credit products are there in your bank, and obviously very similar perhaps in other banks as well. So maybe you just want to expand a little bit on that, that's available out there. And, you know, again, I mean, you mentioned the approach and everything else that people need to do right in the beginning. So it's quite cool that we understand what's the criteria. But then what's available? How do people approach that process? If you don't mind just giving us some insight there.
Yeah, Paul, thanks. I picked two products. I mean, I think most customers are aware of the vanilla products, if I can put it like that, your overdrafts, your business term loans, your credit cards, vehicle finance. But there's 2 products I specifically maybe quickly want to touch on. And the main reason for this is to unlock cash flow. Some customers might have this in their business and not aware that they can unlock opportunity by using this. And the first one is a debtor finance facility. This is a non-disclosed facility which is designed to afford cash flow acceleration against the security of a customer's debtors book. So this is a working capital finance solution that converts your credit sales into cash. Debtor finance is with recourse, non-disclosed facility. This means that the business's debtors are not unaware of this financial arrangement between the customer and the bank. The business, however, will be responsible for acting as the bank's agent in administrating and collecting of these debts. Accordingly, both the administration and the credit control procedures within the business must be very, very strong. And the debtor finance negotiates upfront and provides funding of between 70 to 80% against the business debtors books. It's not a product that's commonly used, and I thought it's good to mention it. The benefits of this is the cash flow situation is improved immediately, and this allows the business to grow without suffering many of the finance-related problems that comes with increased sales. The additional working capital may be used to increase turnover and profitability, and the business will be able to negotiate discounts from their suppliers for early settlement of their accounts. And then very important, key balance sheet ratios are improved as the debtors now become a real asset. The product is most suited for growing businesses. Sometimes businesses grow out of their security or the normal security that will be provided. Business growing and trading profitably is very important. The businesses in manufacturing, distribution, and even selected services industries can benefit from this product. Businesses selling to other companies or institutions, but limitations to individual members of the public or sole traders. So we would like to see you supply into a Pick n Pay or stuff like that to use the debtor finance product. The second one is selective invoice discounting. This refers to the invoice level financing, where selected invoices are sold by the small business in order to create an improved cash flow for the business. Some of the main benefits of the funding could be up to 70% of the invoice value. Cash flow is improved immediately, as allowing the business to grow. The product is fully disclosed to the clients. Here, the client where we buy the invoice from will know that the bank is using this invoice to finance. The take-on process is quite quickly. They talk about plus minus 10 days. Cash is available within 48 hours. And again, the customer can negotiate early settlement discounts because the cash is available. If the product is used, the cash flow is available to take advantage of new opportunities. Very important with selective invoice discounting. Here we need very, very strong debtors. Internally, not internally, but you can rather, for this product, you look at blue chip companies, because it must be a big company that you know you're going to get your money from. So those are the two products I wanted to mention. Just on the previous point, Anton mentioned in terms of export. Interesting, this week I read an article which states that 50% of agricultural exports comes from the Western Cape. So the Western Cape is quite big in terms of agricultural exports. And then just before that, the topic in terms of the jockey. So very, very, very important. And I think that's why that's why I started my previous comment on how we assess it, is to know who are we dealing with. And again, referring back to the jockey. Yeah, so that's the two products I wanted to highlight. Thanks, Paul.
Thank you, Tommy, and thank you, Anton. Yeah, so I think we're getting a little bit to the crux there, because I think at the end of the day, when we're talking about the different models, and it's interesting, a mezzanine approach and a vanilla. So it's all these jargon that we sometimes use, which is great. I mean, I think we need to understand that. And what I'm very glad to hear from all of you is that there are there's not one option, but there are several options available. And I think, and again, some of them I wasn't even aware of, one or two that you mentioned now, Tommy, and I think it's very critical that, that we understand that there's other ways of approaching this. We tend to, as a human being, as a nation, as a business, rely on others sometimes to help us. And I think it's a good thing that just to start that thinking, but maybe in my own way, I can actually look at things differently, and perhaps fund myself, or get Andrea's crowd to come and help a little bit. I mean, depending on your business and where you're sitting at. So Andrea, I think, but thanks for that, Tommy. I think it's great, and I think as they obviously, there could be other products, and as we go along. So what I might ask the panelists at some point is just to put your email address down, if you don't mind doing that, that people can contact you sort of directly afterwards. I don't see too many questions here. There's just, I'll come back to this question that you asked Melanie Martins. with Anton just now. So, but I want to go over to Andrea quickly. So just as a follow-up on what we spoke about earlier, I mean, we asked how ready are you for funding, and now we're asking the sense, you know, are you really suitable for crowdfunding? You know, is your business suitable? What does it mean to be in that kind of space? So maybe just give us an idea on your thoughts there.
Sure, Paul. So as I mentioned earlier, it does take a lot of work to run a successful crowdfunding campaign. And unfortunately, launching one doesn't guarantee success. It's not build it and they will come. It's very, very important to make sure that your marketing message is well thought out and to find cost-effective methods to promote your campaign and reward your backers. So the same aspect actually applies to businesses sans crowdfunding. How are you best engaging with your consumer to showcase your business? How are you engaging with them online, offline? So I'd say the first sort of step to gauge whether your business is really suitable for crowdfunding is finding and implementing a cost-effective marketing strategy before you run your campaign, what you're going to do during your campaign, and how you're going to continue this after their campaign. This will be the social media, newsletter database, your website. Are you going to be hosting panels like this? Like essentially, how are you chatting and engaging and constantly reaching out to the people that you want in your business collateral, that you want supporting you, that you want backing you, and that you want to be a long-term supporter of whatever you may be selling your products or services. Then secondly, you kind of need to craft the right message in the campaign description. And how will this drive interest? How will this gauge people that they want to know more about your product or services? They want to know more about your business. How are you going to sort of pull them in and go, right, you're interested, let's talk about funding. Please back me, please get involved. You really, really want to keep that person as your sort of evangelist of your company. You want them to, as Anton mentioned, you've got your family, your fools and your friends. You want them to start spreading the word, and that then grows out to your second sphere of backers or supporters or people who are like, this sounds really great, I want to be involved. And then something that does come into crowdfunding and essentially funding is doing really great visual stuff. So photography and videos, and how can you pitch your product or your business, you know, that 30 seconds really quickly. And that often comes across in a video explaining your products, your benefits, what you're doing, how you're trying to get this done. And not a once-off video. You kind of want to keep that communication going, especially now in COVID times. You know, video and voice calls and Zoom chats are becoming so important. So how can you maintain the sort of role of that? And then the biggie is creating and planning the rewards and what you're giving back to people that will strategically maximize your return on investment, because there is, as much as you're giving away, you're gaining. So you need to make sure that all your calculations, all your maths, all your finances are in place. If you're giving them this, are you making enough in the end? Is it enough for them to be excited about it? And then that just leads into finding the most effective and cost-efficient fulfillment methods for these rewards. So if you're doing the rewards-based system, you've got your tier rewards. Is everything you're giving out, say from going back to the chocolate example, from actually giving chocolates to doing chocolate workshops, are you covering all your bases and still being able to make a profit on top of that? And then from an equity side, are you giving enough away? Are you still maintaining enough? Is there enough interest, enough investment? You know, you've really got to look at it's sort of a business plan on steroids, if you will. And then ultimately your crowd will gauge whether or not you are suitable for crowdfunding, because if they don't back your product or they don't back your business or they don't really commit to you in the beginning, sorry to say, but you're going to really struggle launching off of that. And that's why I go back to being a bit of a risk-free model, because if your campaign isn't successful, three things can happen. So if you don't reach your target amount, the funds are returned back to the backers. So technically, after you have finished your campaign, you're either successful or you're not. And if you're successful, you get the money and you go forward. And if you're not successful, it's fail-safe and the money goes back to the backers. So, and then with equity crowdfunding, it differs in the conclusion process because you still probably have an obligation to the backers, and that depends on how the donations were set up. So that's a kind of an overall on what makes a successful campaign, and how you can, even if you're not planning on doing crowdfunding, how you can take these aspects of marketing and engaging and communicating with people and applying it to other ways in which you can grow your business. So I hope that covers everything, Paul.
And more, yes.
Yeah.
No, okay, because I think what you're saying, I mean, I was just also wondering about it. I mean, if it really doesn't kick off and only 5 people actually contribute, so the ideal is not to use the money until you've got everything in case you need to sort of refund. So that, you know, otherwise, how does it work actually for me as a potential funder of as part of the crowd? So how do I know my money is safe actually? Is that, I mean, I'm putting a couple of thousand in, and for a while he says, no, listen, we're not continuing, but sorry, I actually used the money already, so can't pay you back. I mean, how does that, I know it's a risk. I mean, everything is a risk, but I mean, what's my recourse?
So technically what happens is that the platform, so you'll pay your money into your platform, and your platform will keep that money until the campaign is closed. So the person running the campaign has absolutely no access to that money until they are successfully funded. So until the course of the campaign has run, how many days it's going to run, and that you've reached your target. So that's why we say it's a risk-free model, because if you don't hit that target, you don't owe anyone money. And then the crowdfunding platform, this just reimburses you or refunds your money. And then, so you give and you take, and you get back if it's not successful.
Okay, that's cool. Because then I would imagine your suggestion would be for crowdfunding opportunities to actually work through a platform like Thunderfund or any of the others, rather than try and do it on your own. Because I mean, obviously, as a platform will be also guiding in terms of, you know, looking at the model and making sure that it can actually repay, and whether you actually do qualify for this process. So you can't just jump in, and it will actually sit on your platform then as well. So it will be marketed from, let's say, from Thunderfund for instance, and rather than separately on the side here, because then so actually the message is, if it's not on one of the platforms, don't fund it. Actually work, because at least you're putting that little bit of governance in there, and ensuring that that things are safe on both sides. I mean, obviously it's covered both sides. I mean, both the funder and the fundee.
Yeah, definitely. So I quickly put a link in the chat. FinFinder's got a whole list of platforms, and just reach out to a whole lot of them, I'd suggest, and see what they have to say about your business or your approach. It's worthwhile getting as much information as you can before actually launching this, because as I say, you don't get a second chance to make a first impression. So really go out, do your homework, chat to people, see what their suggestions are, and be open to suggestions. Unfortunately, as entrepreneurs, we can hold our ideas very close to us and we don't want to change, but they are seeing your business as how a customer may see it. So that's why I say just really reach out to them and see if you're suitable for crowdfunding. If you're not, they may have different ideas. There's always other marketing opportunities. So just see it as a broader way of gauging your business and marketing and potential funding. They might say, go to a bank or do this or do that. Yeah.
No, thanks. I think that's actually critical. And back to what Anton and Tommy also mentioned earlier, you know, so any application, it seems like wants a lot of work from you as the entrepreneur, which is normal, but sometimes we don't feel we have the time and effort is there. So I think, you know, that typical funding fatigue or what you want to call it, that, you know, that process that you have to go through sometimes also stops things like that, you know, because sometimes you just get tired because they're asking questions and questions and questions. I just want money. I don't want to answer questions. So I think it's actually, but I mean, I think we need to be aware of that. And sometimes we do forget that you have to put something in to get something out. And I think you guys mentioned right in the beginning in most of your conversations, it doesn't just come. So, but thanks for that, Andrea. I think it's very critical. And I'm glad there's a backup system in the system to actually help both sides. I mean, at the end of the day, that's what it's all about. You know, I just want to know, I don't know if you mentioned it today, but you're also working in the wine industry, and now you're talking chocolate. So we're actually getting closer to a very nice pairing process.
Lunchtime.
Yeah? Anybody with some other food products that we can add to this mix?
Cheese and
sitting around
crackers.
the yeah, now that we can crowdfund it, so it can actually work quite well. So, but yeah, thanks for that input. Just a last question here coming from Neil there. Earlier there was a mention of exchange control advice or applications that may be needed in terms of foreign funding. Are there specialists in the region that can help? Or does F&B, and maybe Tommy, I come back to you on that one, have someone that can be contacted? So maybe between Tommy and Anton on that question. I'll just read it again. It's on the Q&A. If you want to read it there. Mention of exchange control advice or applications that may be needed in terms of foreign funding. So are there specialists in the region that can actually help with that? So maybe between Tommy and Anton, you can answer that for us if you don't mind. Thanks. You can go, Tommy.
Yeah, Paul. So we've got Neil McConnell from R&B or F&B Forex. So he services this area to help us wherever a customer comes with a Forex requirement or assistance in terms of exchange. Something that we'll attend to, but we've got very skilled people who can help us with that. So yeah, we do have resources to assist them.
Great stuff. So I think your name is in the sidebar there. If not, just perhaps put it there so they might be interested for that as well. Anton, from a Wesco perspective.
Yeah, I would agree. The banks are probably best suited to help you with that. The only thing is that I know if it's from a personal capacity, you probably will require tax clearance certificates, which is obviously something that SARS is going to help you with. But yeah, I think between the bank and SARS, those are the two people you would need to contact.
Should be sorted. Okay, great. I know that RMB has been running a couple of these workshops as well over a period, and so that's also critical. So what we can do is to send that information out as and when they come and do it again, because they do a bit of, let's say, export training, if you want, so to understand things like that, for instance, and how people can actually be benefiting from that. So Tommy and Neil, if you're listening and so forth, maybe we can consider an online one at some point as well, because I know you've been doing it live all the time. So maybe that's another opportunity to get a bit more people in. And I know from a Wesco perspective, they're also assisting in export development of businesses between them and CEDA and the municipalities at this point in time. So it's a little bit out of the funding area, but I think it's still critical, because I mean, if you're looking at your own financing and apart from getting money from outside lenders and funders, sometimes you can generate through different approaches and diversifying your markets again, and that you can look into that. And Sonja sort of touched on that a bit earlier, but I think that's the kind of thinking that we need to just bring into our party.
Well, just to add on to what you were saying,
yeah, sure.
Regarding the export program, I sent you the invite a few weeks ago, but we are, just to let any businesses who are interested know, we are running an export advancement program specifically for businesses in the garden route next week. It begins on the 2nd of November. If anyone is interested, just pop me an email and I can send you the link to that. That's specifically for businesses who are interested in exporting or exporting their product. You need to have been an existing business and be supplying to a local market already. So we'd like to assist businesses, and it's a 5-day program that's run by an external moderator. It's at no cost, and yeah, the purpose is to try and get as many businesses as possible in the garden region export ready. Thanks.
Great, thank you. Tommy, you can take note. I think there could be a couple of your clients as well, and same with the rest of the panelists and everybody else on the call. Fine, there's no more questions here. So I think, just as maybe everybody can switch their screens on from the panelist situation, so that we can see all of you at the same time here. I'll excuse Melanie and the team there, because they actually just our background guys, so that's why I didn't introduce them earlier. So it's not that I'm ignoring them at all. But I think I just want to, from my side, unless there's a very last question from anybody on the Q&A, but I don't see that, and also not on the chat side of things. But I really want to thank you guys for your time. I think it's been great to get that broader view a little bit, if you want, in terms of what's possible and what's available, and how you as an individual can actually tackle that instead of waiting for somebody else to come and do that. So I think, what COVID has taught me in any case is, you can sit back and blame, or you can stand up and do something about it. And I'm hoping that just by bringing this little bit of insight in, and what we did with the previous Webby shop as well, that we came up with some other solutions, and following ones after this, is that we just do that, in terms of, guys, there's a different way of looking at it, and it's up to you as an individual. It's not somebody else's job. Yes, there's a lot of support. All of you mentioned that how you can help, and I'm very grateful for that. You're not alone there. That's the nice thing. The other nice bad thing, if you want to do the combination, is that we are not alone in the world with that either. So the rest of the world is equally struggling with this whole very same concept. I mean, I've been reading up quite wide and far. And it's every single country, every single business organization, every single chamber, every single business are struggling with the same problems and the same thoughts. So that's the one part of the upside. We're not alone, but the downside is we're not alone. And I think it's the situation is that there's so many people out there that needs this kind of assistance. There's a lot of tourism people on the call, and I think they're feeling this whole thing that's hitting them the hardest. So I think and we need to think differently about how we approach things, and how we actually work what we work, and how we do things, and that's very critical. And I'm hoping that this little interaction that we had this morning just opens up that mind a little bit. And you guys mentioned it as we went along about being open-minded and being a bit different and be a bit forward-thinking. So I'm hoping that did something for you guys as well, sitting on the call. And as panelists, I mean, I've picked up one or two nice thoughts here as well. So thank you for that. Definitely chocolates is now back on my list again, although I'm trying to shed this COVID weight a little bit, and now there's chocolates again on the horizon. So I mean, I'm stuffed. So there we go. Thanks for that one, whoever brought it up. But thank you for that. I think you did put your names in the chat side of things. What I would like to also stress is that we have made a recording, which we will send out to all the attendees and everybody else that registered, and we will put it on the social media platform. So if you don't mind sharing that further into the system, it will also be great that we can just make sure that people are also a bit more aware of these things. And individually, please, guys, that's on the call. I think you've got a nice variety of information here that you can use or not use. It's obviously up to you. We hope that you will be in contact with either ourselves if you can't find the guys, or and so forth. I will get that information from Anton. And if anyone else wants to share some information back to me that I can add to the pack, which we then will distribute through the Garden Route website, obviously through the LinkedIns and the Facebooks and everything else, please do so. I mean, if there's any information we can add, we will willingly do so. Yeah, so I think we're half an hour earlier than anticipated, but that's always great. I think obviously there's work to be done out there. And I think it's very critical that we go and do that. So I want to say thanks, Anton. You want to just say thank you personally from your side as well, if you don't mind. I'll just go through you with just a thanks, and then we can take it from there.
Thanks. Yeah, just on behalf of all the stakeholders, I suppose, Garden Route District Municipality is also helping us host this webinar. Thank you very much. I think, yeah, the call is open, and as Paul mentioned many times, it's up to you to go and see what's out there in terms of your funding opportunities. There's a lot of different ways to approach it, but end of the day, it's going to require hard work from the person in charge. So thanks very much on behalf of sort of myself. Please don't hesitate to get in touch, and yeah, stay safe out there.
Thank you. Tommy, just a thanks and a goodbye from you. And Jan can show his face quickly. Then
Yeah.
him at all. So maybe you can look around over your shoulder there quickly.
Thanks, Paul, from FNB's side for allowing us this opportunity. Yeah, I mean, we're really here to help from all different segments of customers. So I shared my contact details there. Even if it's something that's not in my area of expertise or doesn't fall into my segment, you're more than welcome to refer it to me, and I can help you guys to get in touch with the right people. So from FNB's side, thank you for the opportunity. And we're really here to help. We're a big organization and we do make mistakes, but we're really here to help. So the invitation is open to contact us. Thank you very much.
Thanks, Tommy, and thanks, Jan. Sonja?
Yes, Paul, thank you very much for allowing me on the panel today. I think just the last message I'd like to leave with everybody is to change your mindset. Don't feel stuck with fear. Step into the unknown. It's the only real reward that you're going to get. And yes, I'm also available in terms of if anybody needs more information, drop me a line. I did put my details into the chat box. And thank you, Paul, and everyone for attending today.
Great, thanks. Andrea.
I got left for last once.
this time you started and you're finishing, so that's okay.
It's normally A that comes up first. No, thank you to everyone who joined, and obviously those who'll probably watch the recording. I hope this was very helpful, and thank you so much for including me and setting this up, and all the best to the businesses, whatever you're doing. I just wish you absolute success and steadfast in what you're doing. There's a beautiful word that Paul and I were talking about the other day, and it's, you've got to remain tenacious, and you've got to, I can't remember what it was, Paul, you'll have to mention it was Afrikaans, but you've just really got to get your teeth in there. Fuss bait. Yeah, you've really just got to, the fuss bait at this time. And if you know your business is worth it, you'll really put in everything it needs to make it happen. And yeah, as I mentioned, my details are there. If you want to chat anything creative, business, crowdfunding, marketing, always here to talk. And looking forward to being in the garden route in December. So we'll be down there. Yeah.
Okay. Don't slip in here that we don't know about you. Okay, so we'll catch up with you now that we all know. No, thank you. I that fast bait and tenacious, I think it's actually quite apt to end up with that, because I think that's one thing our region is actually very good with, is that tenacity and that resilience that we have. I mean, we've been through some interesting times, and I think it's one thing that I've picked up over, and I've been in the Southern Cape now for 25 years almost, and that's definitely one thing that we can do well, is fast bait now. So, and I think that's very critical. Difficult times, but yeah, positiveness is always a virtue, and I think that's very critical that we continue that. I don't know if Melanie wants to say something at the end here, but I will not push her for that. I think it's okay if she doesn't. And I think it's also fine then from our side. Again, thank you as the panel. So before you disappear, I'm going to take a little photograph of your faces there, if you don't mind. So don't jump off afterwards. And then to the attendees, thank you very much for participating. I mean, there's been some good questions coming from you guys as well. I'm sure some of them were very shy to ask these specific questions. So I'm assuming that there will be separate questions coming back to you later on. And I think also after, once the recording is out, there might be some other interest in it. So what we will do for the rest that's listening in as well, and also for the panelists, we're looking at the series. I mean, this is not the last one of what we want to do. There might be one more during the course of the year that we're considering. Andrea and myself is talking about something different, that we will perhaps just get into a municipal process as well. So we'll look at that, also a similar kind of model, but just for municipalities. But then we also want to, towards the end of this month, maybe early next month, Anton, you don't know about it, but we will speak to you about it as well. I just sort of spoke about it yesterday, is that we want to start looking into a little bit of a business chamber linkage process a little bit, so that we want to just see how we can help those guys a bit harder, apart from just the funding models that's already out there. So maybe I'll have a chat with you to see how we can fit that in as well. So we're hoping early next year to do a bit more of a marketing approach. I mean, already Andrea and I think Sonja and both others also spoke about this marketing plan thing and the way that you're out there and promoting yourself. So we want to bring that in a little bit as well. You can do your marketing different and start looking into that. And I think it will be very critical for the rest of the industries. I know everybody's getting busier toward the end of the month. I hope so. And end of the year, definitely so. And I hope that it still picks up for everybody. I know everybody's a bit down in terms of turnover and things, but we hope that that busy time will be busy as well when we get to that. Maybe it's strangely busy because it will be with masks and social distancing and all those things. But yeah, we need to, business must go on. And I think we hope that as a nation, we can do so over this period. So let's hold thumbs. So without any further ado, thank you so much for attending and good luck with the businesses. And thank you again, panelists. It's been great. And then we're looking forward to future engagements as well. So all you need to do, the 5 of us here sitting there on the screens, just smile broadly. There we go. Thank you so much. And have a beautiful day and good luck. Thank you so much.
Thanks, everyone. Thanks, Paul. Cheers. Bye.
Thank you. Bye.
Cheers.